Zlotowitz. Ira spent years building and advising businesses across different markets. What I want to focus on today, how do you build a business from scratch that actually lasts? Not just something that grows when markets are good, but something that survives pressure, change, and scale. Ira, thanks for joining me.
Thank you very much for having me.
It's our pleasure. Limited resources early on. Which of these is dangerous to delay? Product, revenue, trust, or systems? And which ones are actually safer to underbuild at first?
I'll break it out and I'll stack rank it if I can. The most important is everything has been built around revenue. Revenue solves all problems. You can have the greatest systems, the greatest product, the greatest operations. If you don't have revenue, nothing's there. So you have to focus on how you're getting revenue first and then reverse order based on what you have and don't have.
So what would you put at second? A lot of people like to perfect their product. A lot of people just put something out that's good enough and then build it on the fly.
There's a rabbi in our industry called Rabbi Frand, and he has a famous line that says, "Perfection is the enemy of good." My motto in life is live for today without sacrificing tomorrow, and better than yesterday towards perfection. So you go put something out and then see the results and move. Because I find that if you're going to go ahead and build this whole perfect product you think is perfect, it's not about you, it's about the client. It's about what is the client going to say. So you have to keep iterating. Never wait for perfect. I'd rather put out things piecemeal earlier and then test the waters and go from there. The mistake that I made this time is that I sometimes put it out too wide. So I should have put out the beta test with just a few people first, see the reaction, and then adjust the messaging even for the next group. So not only is the product better, the messaging. If I could give an example to you, which we're going through right now, and actually we're releasing actually today, is that we spun off from my Japarency's company, we spun off all the AI and the tech into a separate company. I'm in the real estate space. So I want to be able to help people while they're buying real estate. Because if I'm helping them while they're buying real estate, then obviously when they need the financing, which is my core business, they're going to use me, right? So every company does like, what's the top of funnel? So we built a free OM summarizer. OM is offer memorandum when someone's buying real estate and they read it up, but they have to spend 10, 15, 20 minutes. I built a summarizer. And it also was able to track things, keep it organized and keep notes on it and things like that. So I was originally we were calling it an OM summarizer. And thank God we sent it out only to a handful of people because the feedback everyone was asking, like, what's the difference between this and ChatGPT? And I was explaining it. ChatGPT, you have to prompt it and you can't save the results. And you're right. If you teach it what you want, but the 18th one will be right, be still to prompt it. This knows what to do. Drag it, drop, and it knows exactly what to do. Okay, they got it. They're happy. Well, it's pretty cool. I had that barrier. I lost them. It wasn't simple. All of a sudden, someone looks at it and says, Iron, the main thing you have here that's unique is the vault part of it. The fact everything's together. And we switched the name to OM Vault. So now you're thinking OM Vault, never lose track of it, keep your notes, keep update information there, upload documents, and it summarizes it for 3 minutes. People love it. The reactions, unbelievable. It's great, unbelievable, and it summarizes also. If I would have went for perfect, the messaging could have been off, and who knows what. We had the first iteration on 10 other plans to go. But once we leaned in, we were going to make a ton of changes on how to summarize it better and faster. That wasn't the focus of people. Be able to stop there and go out. So this way, by the time we release it to the product, did we get perfect to the release, the final release? Well, I think so, or hope so. Yes, but look what it took us to get here. That's what, but definitely drop it out. So I would just release something and see can people buy it and what's the plan? Is there enough pain to solve their pain for them to actually use it? Take it from there.
It's incredible when people put out a new product, how they so often miss the mark of, even if it's a well-received product, of what it is that grabs the client.
I think the starting point is like you see it over and over again. It's like sometimes this great idea. Man, what problem is it solving? If you can't solve a problem, most people, yeah, there's luxuries. I want a luxury in life. I want to go on vacation. But it's like you want to go because you want a vacation. But at the root, it's really because I just got to get away. So you have a problem. But sometimes you're dangling the plus. I think you got to really have what's the problem. And most businesses solve a problem.
Right. When young businesses start breaking, what's the first invisible failure that usually shows up before revenue starts dropping?
That could be like a lot of things all over the map. I usually think that a lot of it has to do not willing to change and adjust to the market. Take it in our world today, right? AI is all the rage. You have definitely early adapters and late adapters. But how many people are holding back before they actually start adapting to it and seeing what the difference is going to become from that and how people can use it? So someone came out with it this morning. and was telling me, "Did you cancel your Adobe subscription yet?" I said, "What are you talking about?" He goes, "Like, if ever with AI, why do you need Adobe for?" Like, he goes, "I was driving by the corporate offices yesterday. I'm thinking to myself, like, they're going to close down." Now, I'm sure in Adobe they're thinking about it. I don't think they think they're closing down. Now, maybe companies can have trouble. So I think it's that people don't like really look and like stay the relevance. Like, are they really checking out on the metrics? Are trends changing? So maybe that's not really the overarching issue. But I think today, for the next few years, that's really the problem. If you have a business today, a startup, a thought, are you really could just be replaced by the next update of Claude or the next update of ChatGPT? And that's going to change your business. If owners could do things differently, we were discussing the concept before this online, before we got on, is that in many businesses, people really have this concept of an AI agent. In the past, I want service. I want to be able to call up a travel agent. They're still travel agents, and but if you can now talk the same way I talk to a travel agent, I could talk to an AI agent and get things done. Same thing in your business. What's going to change accordingly? So yes, is there someone like there's a hybrid? They call it human in the loop. So that's why I think even like in your business, having a product for someone that thinks they can do it themselves with an AI help, why should they go build their own AI agent? And in fact, you give them the AI agent on a monthly subscription that manages it for them versus your service that you have. So if you're not going to do it, but you think it's a good idea, someone's going to do it. So would you rather own both parts? That's in effect what I did in my business. I said, hey, what could be the future when I start as a regular mortgage broker? Not everybody wants a mortgage broker. 80% go direct. Some people just want someone to like G-Parency opened. I want to go out there and say mortgage insurance. I'm going to charge a fixed fee. Then even said, no, I want an AI agent to help me. Well, I just want to know, be able to do research which banks, make sure whoever is working with me, I got everything covered. So to a certain extent, if I have three different companies, they compete with each other. But if I don't do that, at least I get market share in all areas. So I think this is the mistake: is are you staying relevant? And I think you had the luxury up until AI came to have a long, even if something opened up, it takes a long time before you're going to go out of business. I think that's a game changer because a 19-year-old kid or a 16-year-old kid using AI today can outperform some of the things that we're doing.
Today's day and age is quite unique in that respect, and it will probably continue going forward like that because technology is not going to fall asleep. It's not like you'll have a lull where things will stay the same. I think they'll just continue snowballing going forward. But from a structural point of view, from a old business point of view, what is the first thing that the startup founders forget about? Which screw in the ship is the one that they don't tighten well enough that makes things fall apart?
I think it's SOPs, standard operating procedures. I think to really make sure they have real systems in place. And I think that by having real systems in place with a metric that goes with it, I think that you'll notice things early if there's a problem. What the cause of the problem is maybe AI, maybe something else, but the systems that come in place that if the person leaves you, the next person can sit in their seat. Now, if you think about it, as McDonald's is built, you walk in any McDonald's, it could be an 18-year-old high school dropout is able to make food for 30 people in 9 minutes, like because of the SOPs that they're following down to the T. And if you break your things down to a process, then you have the ability to go ahead and scale. So it's tough. On the other hand, it's very tough when you're a startup because you're always pivoting. That's the way I went through up until about 6 months ago. We were pivoting daily, weekly, monthly till we figured things out with God's help. Now, as obviously easier in each year, okay, now we set this SOP and this is it. Then we go to the next one. But sometimes also don't get married to it. If it makes sense to change that SOP from yesterday, be willing to change it. Just once you establish the SOP, this is what we're doing until we decide to make that change. But SOP is extremely important. And now ChatGPT helps you even write it.
That leads us to our next question, really. In the first year, what decision should only the founder make, and what decision should the founder stop making as early as possible?
I'm going to take a total different approach because I learned from EOS. EOS stands for Entrepreneurial Operating System, and many companies use it today. That was a big game changer for me when I understood it and they taught me. At the end of the day, most successful companies are run by two people. There's the visionary and there's the integrator. Sometimes the visionary is the person who opened the company. Sometimes it's the integrator. Right? Sometimes you have a scientist who did it. He has no clue. He has no vision. Sometimes you have a visionary. He brings on the scientist. Right? In every industry, there's two people like that. So I think that really is that for starters, make sure that this is what you have. You have this under control. Who's the visionary? Who's the integrator? If you don't get that working, you're gonna have a big problem with the company if you're also going to run. And everyone has the yin to the yang. Any of the top companies that really made it really big. So it's not so much what should he. It's like as time goes on, and you could start hiring people. Start hiring people that is not your biggest strength. what makes someone a superstar is they have certain skills that they're on a scale of 1 to 10, they're 12 at. Some that are 10, 9, 8, 7, 6. But you're forced. And myself, I have to do everything. The first hire should be when I'm a 6 at, what I don't want to do. So now my average on my team goes up. I become a better, and keep delegating and moving those things out. Know that line. Like sometimes says a line where you hire smart people and then to tell them what to do, you waste it. It's like, what are you doing? If you're hiring the right people, then they should take things over and slowly, when you have people, trust and be able to grow on the bigger picture. But if you're that integrator, then trust the vision. So meaning whatever you're giving, make sure you have that at the top, and then together sit down. What is the two of us is our combined weak link, and then so on and so forth as you keep building out a company. But
Part of the problem is that it takes a little modesty, and sometimes founders think that they're the best at everything and nobody can be actually better than them. Is there anything specific where you would say it doesn't make a difference how good you are? You can be a 10, but give it to a 7 or an 8 because if you're going to continue doing this yourself, you're going to sink your own startup.
that's like an obvious. The person has to be willing. You see a lot of times, like when I raise the money, they say like you can't a visionary, a visionary, a salesman can't be a true CEO of a big company. Okay, whether true or not true. But when I went out there and I said, hey, I owe them transparency, and I have this huge vision for where it's going to go to. We got venture money, and in the research I heard these things, and I said my goal is to take them to the movie. Someone said, if you want to take it in the movie, I just realized there's going to come a point, no going in, you're going to have to relinquish running the company and have someone else take it over. So I prepped myself for that moment. If I didn't, and I said, what do you mean? I got till that. I can't go a little further. Because at that moment, it's very tough if you're not thinking about it beforehand. If you tapped on the shoulder to, you have to step aside. Those are root issues that people are going to learn to delegate and they can trust people. And, but there's no one thing. It's always find the thing that you don't really love doing, things you procrastinate at, or you're 6 at. Try to find people to do that love that. But find people that love that. Just realize, I tell people when you hire people, many people make the mistake of hiring people similar to themselves. So I love sports, and I'm going to hire you because when we're talking an interview, you also talk about sports. No, it's a mistake. I want someone, I don't care if you know anything about sports, but you know about wine. I don't know anything about wine. The next guy knows everything about politics. Now, the three of us walk into a meeting, we cover a lot more ground together because whatever topic comes up, hire to complement, not to mirror. People make the mistake to mirror. They have the same problems.
Does that go with way of thinking or just with conversation?
It's everything. I happen to think the way of thinking, so it's very interesting on the way of thinking because like I have certain people saying who are able to tell me the opposite view and I listen to them. And other people, like sometimes I can't listen, even though I was brought up that my mom says take the best of each person. So I do listen to each person, irrelevant where they're coming from. But it's clearly easier to listen to somebody. Like at the end of the day, if tomorrow morning someone is having a major issue and you were friendly with them your whole life, they get you and you get them. And you walk into the person and say, listen, man, give up on this. They're going to listen to you because you can relate to them. And now it's much easier for me because we're post the visionary time. Like it used to be, I said, I had this vision that one day, dot, dot, dot. And then I wanted to make a decision today. If you didn't believe in the vision, you couldn't see it. You couldn't understand my decision today. You thought it was crazy. Today, we reached the point, thank God, other side of the mountain, where everything that I'm thinking is now in front of me. Now it's how do we make all this work and interconnect? So when I tell you I build an AI agent for finance and you see it working, wow, it's working. Let's make it better. I told him I'm going to build one. You had a vision in your mind of A, I had a vision B, and we're talking apples and oranges wasn't working together. So these are things where, as time goes on, you're going to find that right person that you're going to connect with and relate to. And sometimes it should be a consultant. Sometimes you want people in your inner circle and push back. But sometimes these people who push back are the wrong people. They push back on everything. So it's not, you really want someone who is willing to, I told someone, and I found this to be a important part of the success when you're building out the teams, is that if I'm hiring you to do marketing, and I'm establishing you as my marketing guru, when we have a difference of opinion, and there's two choices to go, you win. If I'm in charge of sales, there's a difference of opinion how to sell a product, then I win by default. Meaning the default is that there's two ways to go. Your way is on marketing because that was your end of it. This guy's way is on finance because that's the way of it, and my way is on sales. The starting, I have to listen to all the critiques, but ultimately, like there's two ways to go. I don't have to prove why my way is better. By default, sales is my way, marketing is your way, and the CFO's way is his way. By default, you still have ways to work out differences, but the starting point of default has to be what your strong point is.
What's the most common way founders overestimate their capacity? How does that mistake compound over time?
I think it's unique to the person. Like I say, everyone's strength is their weakness. Right? At the end of the day, what makes me amazing is usually the parts you're going to find my downfall is. And if I learn not to, I tell people don't change the weaknesses, know your weakness, and partner up with
Right.
people who have that as a strength. That
They say not to know your weaknesses is devastating, but not to know your strengths is even worse.
yeah, but don't change your weaknesses. Just know them. You'd rather spend your extra time working on your strengths even better.
What's one financial assumption founders make early that usually turns out wrong once volume hits?
On a broad level, it's something along the lines where they make an assumption of a certain cost, a ratio, of a certain expense item. That totally messes up as it scales. Like you're assuming, hey, my commission rate is this, or my general operations are this percent, and all of a sudden, if you go on a metric, something until it settles down and figure it really out, that thing is awesome. Could be you was using this metric of it cost me 55% of my expense ratio for this. So it's servicing a client that cost me this. So, and then you find that no, it's supposed to be a per person divided by like figuring out they figure that metric out that changes at scale, and you don't even know how the thing changes. Also, as things grow, then you realize that certain people working for you, you ran your numbers. There were a lot of working for you at X salary. The company grows, the salary could go up 50%, 100%. The more people in the department, so and now it go the other way around. All of a sudden now you have AI. So the same person going to, you have 3 people in the department. You thought you're going to have to hire 4 or 5 to grow. You don't have to hire those extra 3 people. That one of those metrics ratios, I think, totally gets thrown off if you're not really watching it and taking all different approaches.
When things are going well and growth feels easy, what should founders be doing deliberately because they know it won't stay that way forever?
I think to always relook at the expenses. I was always trained and told that, but ultimately, every once in a while, look at your business. I'm having a retreat even coming up where we're going through the 3 scenarios. What if everything goes as planned? Who's my next hire? What's my next move? Things are going the way it's planned. What happens if things stagnate the way it is? What other things go worse? And when you wear the hat, what it goes worse, don't say that, but it's going great now. No, no, no. In that hat, it's worse. And then make sure that you're covered in those 3 bases possible so you're prepared for it anyway. So always review that book to make sure that you're covered in all ways. And I also find through that exercise, interesting, every time we do it, we find that there's one person or one department to something that's in the best case, we don't care about the department. In the worst case, we don't care about the department. So why do we have the department now? Let's retool them to do something, and you realize that something comes up that you're better. Not just it's a plan if, but at the moment you realize certain things like, as you keep I call it hitting reset, hit reset often.
Which early decisions are easy to fix later, and which ones quietly lock the founders into bad paths?
Okay. So this talks very well with a concept that I have. I call it, I'm always willing to pay the toll. I don't care to pay a toll, but something that has a permanency to it, I'm going to spend a lot of time to make sure nothing goes wrong. So a lot of times when a company's young and starting out, someone taps you on the shoulder and says, hey, I'll bring you down a certain path, but I want a certain royalty. I want a certain override. I want a certain commission. I want a certain something. And you're so happy to get those sales. But what happens is you like someone comes in early to the business and says, I'm going to run this department for you, but I want to get 5% of the growth. And right now, I'm not really selling much. He's willing to work for free. So obviously, it's an easy deal to make a decision for today. But then all of a sudden, sales go in that department $1 million, $2 million, $5 million. So if it was the person was the right person and he's growing that department, he's running the whole thing, it makes sense. He got compensated for that. But what happens really, it's in spite of him. I only say because of his salary, but as time goes on, it just his swapped out of his salary was the same, what should have made 200 grand, pay him 200 grand now. That's what he's worth. And the growth has nothing to do with him, but you caught in contract. So that's always the big. So I found myself hedging that a lot of times. It's go into a deal and tell someone, listen here, if you want to take the risk, in good faith, if you're the right person, I'll work with you. But we have to have some way to protect me that in case the growth happens, it's not because of you. I don't want to resentment that way. On the other hand, you want to protect yourself that if it is because of you, or just at least make your money back. So I have like a lot of concepts I meet people early on that want to take a level of risk. I say, listen here, we'll go double or nothing concept. Let's work out a formula. Now you could leave. Let's say you're worth $100,000. You only want to take a $50,000 base. Let's work out a royalty, but you could earn 100,000 extra, 50,000 times 2. So you're leaving 50 on the table, earn 100 for that. So, and when you get there, we'll sit and talk again. I find that that's a happy way in the middle that works for everybody at some level. I mean, obviously you have to tweak the concept, but I think that's what it is. Something that could be permanent. Spend a lot of time. What's it called? It has to be really all the scenarios done. What I like about ChatGPT today is you could talk to it and say, "This is what the person wants. What could go wrong?" and have carve-outs for it. But that's something that can have a long-term thing. You're hiring someone at will. You make a mistake, they could quit. They could be fired. You could start a department out. You have a right to buy things out. Like sometimes I'm nervous. I have a right to have a buyout if it goes crazy. But I can tell you, above all, I learned most fights, most most people spend so much time on all the what ifs. What if I do 20 million in sales? Then, and meanwhile, at the end of the day, most business don't get off the ground. Most things don't get off the ground. So they spend so much time on the what if. Very few people are fighting when they hit 20 million in sales and how to figure it out. It never gets there. So never get the first base. That's most of the problems. So focus on what really has a meaning to be a difference.
When working out a deal like this, what objective markers are there? Because I mean, I once had a startup and we were negotiating with a venture firm, and it took about 3 months. And at some point, we had raised our valuation because certain things happened. And the venture capitalist, he said, but I shouldn't have to be diluted because of that, because all your success the past 3 months was because of me, because of our conversations. So, how do you explain to a guy, well, it's not because of you, the success that we're having, so therefore your commission doesn't continue? Everything could be made a case that it was all about me, right?
100%. That's why I do a lot of things very clear in writing beforehand. So you were in talks with the VC, but the VC didn't have a deal with you that if the valuation goes in the middle, he has the right to the old pricing, right? If he was smart, he would have worked it out there. This is the price until he would, and you would may have agreed, not agreed. So when someone's coming with an expectation, I make sure I write it all out in the beginning, all the scenarios. So this way, it's easier to talk in the hypothetical than it is if there's money. Then money, what do you mean? It's me. If you would ask in the beginning, say, while we're talking, naturally through these conversations, I'd be talking to you as a consultant. I'm going to learn things. You're also going to be better off. On the other hand, let's say your valuation was $10 million before you met him, and through the conversation went up to 12. It doesn't make sense how big the number you went up to, what the numbers were. At the end of the day, someone else offered you to invest at 12 million. He's standing firm at 11. You may have gone with him because he goes, listen here. The bottom line is, look, when I'm not even your partner yet, you don't have my money with me. I was helping you with things and it worked. Don't you think I'll help you grow? So you might say, no, it was nothing to do with you. But there's the two sides in every negotiation, strength and personality. So either side always thinks it's them, but at the end of the day, you see your whole life. Someone walked away, the greatest thing they did, the stupidest thing they did, right? You see your whole life that way. There's no way to.
At what relatively small scale does a business's original design usually start failing? I'm not talking about when massive growth, just the first pressure point.
I don't think it's a number like that. I think that if it's pressed on the point that is the issue, right? If a person's overfunded, then money's not going to become their issue. Sales slowing for a long time is not going to become their issue, right? If their issue is money, then that's an issue. If their issue is that you have a system that just built it, and if it to handle 1,000 people and 10,000 people come up, yeah, they can have a systems problem. So it's always that weak link. Like they only as strong as the weakest link. I think that's what a pressure thing is. So I don't think it's a specific.
So you haven't seen a trend with startups that they usually hit a certain speed bump at a certain time because they were
Usually it's money. Usually it's money. They run out of funds. Now they can run out of funds because they don't have the money. They can run out of funds because they don't have sales. Probably don't have sales. They've had the sales, but it's usually it's money. That's why a lot of VCs or investors, someone says I'm raising money and I'm only raising money to carry me for 6 months. I'll raise again in 6 months because the founder wants to do that because they think in 6 months that 12 million we're using that example we just discussed, it would be at 15 million. So raise the next money at 15 million. So, and no, I'm not taking a risk and run out of money. And if someone sees you desperate, they're going to want you to come in at 9 million because you're stuck. So either you're taking my money, either at 12 million, you're taking enough to carry for 2 years or 18 months. I'm not investing at all. So the
right.
fear definitely is the number one reason I think business goes down is because of money. What is the most important thing within a company to be successful? When the companies make it, was it their product? Was it their team? Was it the timing? Was it the synergies? Was different? The answer is timing. Someone did a study of all the biggest companies. Like think about Uber. Uber would have opened up 10 years ago, but whatever. Before that, it wouldn't have gone anywhere. Right? Zoom took off. Everything happened at a time, and that's what made the thing take off. Right? I feel the same certain things within my business also. Did I open up a Japarency that had a technology automation component to it? They do things yourself with technology. The world wasn't ready for it. Thank God we were able to carry it through till now and spin that off to Avery as an AI agent where, okay, you want the tech, that's Avery GPT. You want the human, mortgage insurance is Japarency, and go back to my former company at Eastern if you want regular brokerage. So the world is now ready for tech and data that, if it wasn't ready for it,
I think every huge success you can probably pin back or map back years before where there was some guy way ahead of his time who tried it and just fell flat. It's not just pure luck. You have to map the conditions in the world to make a product that the world can accept.
Yes and no, because you can't really count on that. Like I looked at the map and said, "Hey, there's enough people that are still going direct." But again, also don't forget the cost of change is very expensive. Getting people to change is very expensive. But now, when people's belief system is the future is a certain thing, they want to jump on the bandwagon. It's easier for me to convince someone of a certain product today than it was in the past.
Right. Okay, that was awesome. Thank you very much. I
So,
think we hit a lot of points that resonated with you, I hope. You certainly shared with us some real wisdom. Thanks a lot. Until the next episode of Get Real, Get Wiser, we have Ira from G Parency, ahead of his time, but always knows how to make it work anyway, knows how to educate
oh,
the
that's all God.
generation.
All God. All God.
All God.
Yeah.
Okay, God is with him.
Yeah.
Thank you, Ira. It's been
Thank
real.
you.
Thank you very much.
Thank you.